What's going on, my favorite income community? Welcome to my channel. Oh, it's a little cropped out. There we go. Welcome to my channel. I'm the covered call guy, and for those who are new, my YouTube journey here is to create $120,000 in annual passive income. Currently holding seven GPIX, QDIVO, GPIQ, IWMI, SPY, QQI, IDVO. Yes, 7 cover call ETFs. Hence my name, cover call guy, right? Of course, when I hit my goal, for those who are new, obviously I'm gonna say this again for those who are new, I will be buying uncapped and more traditional growth dividend stock. So yes, for now, I will be the covered call guy. Right now, my projected annual dividend / distributed income is about 70 grand a year, which translates to 5.8K a month, 1.3K a week, $193 per day, and $8.05 per hour. Before we get started on this video though, legal disclaimer, this content is for informational and educational purpose only. It should never be considered financial, investment, or tax advice because I am not a licensed financial advisor, investment professional, or tax expert. All opinions expressed are my own and may be inaccurate or incomplete or just flat out wrong. So please conduct your own due diligence and consult with a qualified, licensed professional before making any financial or investment decisions, guys. Remember, I'm just a random idiot you found on YouTube, and I could be completely wrong. Okay, so this video is really directed at the new subscribers, the new viewers of my channel. For those who are not new, this video, hopefully it doesn't bore you too much. Hopefully you do stay, but yeah, this video is really for those who are really thinking about on the edge of getting into income investing. You know, this is for you. I'm gonna say stop making income investing so hard. Let's take a look at DIVO. Is DIVO the easiest way for you to earn a 5% yield? Well, all right, let's find out. All right, so how did you even come into income investing, right? You know about the 60-40 portfolio. It's dead, right? Historically, boomers and Gen X has relied on 60-40 because inflation and low rates did not destroy that safety net, right? Pure dividend stock barely yield 3%, but it was good enough because inflation was 2% or lower, right? On the flip side, for those who are chasing 12% yields or greater with a mechanical cover call ETFs, which those do guarantee your principal decay over time, you are desperately looking for a core income asset that bridge this gap. And what can I give you better than DIVO to get your foot wet in this income game, in this income space? All right, let's look at the do-it-yourself option nightmare. What is it? Well, massive capital. So if to do it yourself, to replicate institutional cover calls, you do need hundreds of thousands of dollars just to buy 100 shares lot. Okay, time drain. You have to monitor implied volatility, calculate the Greeks like 0.30 delta, real contracts while bleeding money to bid ask spread, and of course the high stress, the anxiety, the high blood pressure, right? It transforms your dream of passive, quote unquote passive income into a more highly stressful, demanding part-time trading job. Nobody wants that. We all want to be free. Well, let's look at the New York City tax trap. What does it mean? Well, a 38.6% marginal tax drag on a $1 million portfolio size. So if you are retiring in New York City with a $1 million portfolio, needing exactly 50K a year to survive, I don't know how you can do that in New York City, retired, right? I'm just this example here. If you manually trade options, every expired premium triggers brutal capital gains and local taxes approaching almost 40%, right? You will get buried in Section D tax forms, right? I wouldn't wish that operational nightmare on my absolute worst enemy. Absolutely not. Heck no. Well, let's look at the set and collect solution. This is from DIVO. That's the ticker symbol from Amplified CWP Enhanced Dividend Income ETF. It is an actively managed fund from 2016. Guys, it has a 10-year record that blends 20 to 25 blue chip stocks with a tactical cover overlay. What does it mean? It literally packages a highly complex institutional derivative strategy into one single liquid ticker. Okay, so you get dual income sources from corporate dividends and option premiums without doing any of the heavy lifting. So this outsources the complexity completely, and it gives you a very defensive equity core. I love it. All right, but what is the brutal trade-offs here, right? I'm gonna give you the pros, I'm gonna give you the cons, right? The ultimate sacrifice that you're going to have to give that is unavoidable is the capped upside, right? Your upside is permanently capped during roaring bull markets because of cover calls, fluctuating yields, right? Your monthly income can and will fluctuate constantly based on prevailing market volatility and corporate dividend yields. It can go as low as 4%, I've seen, and it go a little bit higher than 6.11% yield, right? Active risk. And finally, you are taking on an active management risk while paying that moderate 0.56% annual fee here. Okay, why do I say it's the easiest? Well, because it is the sweet spot of the yield, right? DIVO has a 5% compared to SHD, 3.5, VYM at 3.1, and SPY at 1.4. All right, so I got cut off, but I'll talk about it. All right, don't worry about it. I'll talk about it. All right, DIVO does target 2-3% from dividends and then 2-4% from premiums. So hovering in a 4-6% total yield range. Right, currently as of this video is 4.8 forward and 6.29 trailing. So it perfectly trends the needle between 3% like passive funds and then 12% like your higher yield cover call ETF. So it sits right in the perfect middle. It doesn't move too much. You don't have to worry about it. In my opinion, extremely, this is where you're gonna go, oh, is it sustainable? Is it reliable and it's consistent? Yes, this is probably the easiest way, in my opinion, to get 5% yield without worrying about it too much, without like, okay, I don't want a single stock, I want a semi ETF. Well, DIVO is your go-to. Right, quality matters, right? This is another option why to love DIVO, right? DIVO doesn't blindly sell index calls. It actively holds fortress blue chip stocks like Microsoft, Apple, JP Morgan, Visa, and Home Depot. You know these big titan names, right? These are massive companies with deep economic moats. Okay, that's all we care about, moats and consistent cash flow. So it's very stabilizing. So when the market tanks, right, the call options expire worthless, allowing the fund to keep 100% of the premium to offset equity losses, right? So your capital is preserved, volatility drops, and you do maintain long-term growth potential. That's what it does for you too, growth potential. All right, volatility adjusted efficiency. So look, this is a 5% yield, right? It's absolutely worthless if extreme volatility ruins your sleep and forces you to panic. So looking at the beta portfolio of 0.65 with a Sharpe ratio of 1.15, right? DIVO boosts pretty much a standard deviation, meaning it is 35% less volatile than the broader equity market. So it severely truncates losses, proven in 2022 when the market dropped 20%. DIVO only fell 1.4% with a downside capture of a ratio of 70. This translates to insanely smooth equity curve gain that gives it a robust Sharpe ratio of 1.15. Okay, Sharpe ratio matters a lot. You do have to worry about that. You do have to care about it when you are picking your stocks or ETF. That's how you know it's quality stuff. All right, let's look at it. Historical yield stability, right? So looking at this chart, right, this is an actual data from 2017 to 2025, right? Across bull market, pandemics, and rate hikes. What is it showing you? What is it showing you? Its payout is sustainable. It is growing, right? The market regime context of late year bear market all the way to the pandemic crash, inflationary bear market, broadening equity bull market. It is sustainable. It rides with the market. They're doing a fantastic job. Remember, it came out, it has a 10-year track record, okay? 10 years. It's telling you it can play the long-term game. All right, the behavioral advantage. All right, so I do talk about this a lot because, again, I do talk as if you are new and you're trying to get to a space. Apologize. I'm not talking to you like you're dumb. None of you guys are dumb. But I do have to say human psychology plays a huge part because it does destroy portfolios because we do suffer from loss aversion and panic when forced to sell principal, right? DIVO understands this. It caters to your mental accounting bias by treating capital as sacred while giving you free cash flow to spend guilt-free, okay? Because you never have to manually execute a sell order. Your cognitive load drops to zero, saving you from a 3 to 6% behavioral gap underperformance, okay? This single ticker here gives you the solution literally to protect you from your own worst emotional instincts. Okay, that's the worst own enemy here. Okay, the paycheck psychology, another reason why I love it. Traditional equities pay you quarterly, right, forcing you to act as your own treasury manager with severe cash drag. I don't care about deferred taxes. I don't care about how big the payouts quarterly. I care about liquidity, and I care about monthly liquidity. Okay, I want the monthly cash flow. DIVO does that. DIVO converts 5% annual yield into 12 predictable monthly distribution that aligns perfectly with your real world 30-day billing cycle. Hello, I have to pay my bills every 30 days. Do you not? Well, if you don't, you let me know what company you can sign up for. Okay, so right, this is a predictable deposit, and it triggers what we call the happiness dividend. A real thing. Go and Google it. Right, this drastically lower your anxiety and improving your overall mental health, because what is the point of financial freedom if your mental health is down in the gutter? All right, let's look at the math of compounding. If you are in accumulation phase, right, the math behind DIVO's monthly distribution gives you a massive invisible edge. Okay, what do I mean by this? Well, if you are compounding 12 times a year instead of 4, it means your money automatically buys fractional shares 30 days sooner. So if you turn on drip, well, you don't have to, you can reinvest manually yourself, right? If you turn on drip, this high frequency compounding geometrically expands your share count over 20 years with zero effort. This is what we call the invisible edge here. Just leave it, don't touch it, right? The case study, guys, you know I do love using case study, using data, right? Let's go back to if you were living in high cost of living area. Take New York City retiree that needs exactly $50K from a $1 million portfolio, right? So by putting it into DIVO, she gets exactly $4,166 deposit every single month without executing a single trade. Okay, plus portion of the distribution can be classified as ROC. Okay, so that means deferring taxes until she sells the shares. So, you know, this person over here, she transforms a catastrophic tax reporting burden into one simple 1099 form. Okay, if you remember, I talked about the tax earlier in my video. Well, gone, right? Return of capital right here. Okay, so where does DIVO actually fit? I like to give the pros and the cons, right? Let's talk about who to avoid. So, being crystal clear here, I'm trying to be truthful to you, right? Who should actually buy this ETF? Well, if you're a growth focused investor, maximizing gains, or trying to optimize taxes to the penny, well, guys, stay away from this. This is not for you, right? It's not for you. It's not the one. Well, this would be the perfect fit, right? But if you want a set and forget passive income portfolio for retirement, DIVO is unmatched. I truly believe that. Right? It functions flawlessly as your core income building block to fund your lifestyle. I love it. All right, so my final verdict here before I end it, yes, DIVO is arguably, my opinion, the easiest and simplest way to earn 5% annual yield. Okay, you get monthly income, right? You get that nice juiced up cover call premiums. You have some dividend growth stocks for that growth. Remember, it's not just pure income here. It does income and then growth. And then professional management from Amplified, they have been doing a great job, all inside one ticker. If your goal is simple income with minimal maintenance and reasonable growth, DIVO is very hard to beat. If you're watching this video and you're looking for a sign, go back and buy your time back. Go buy your time back. Okay, this is it. DIVO's the easiest 5%er right here. I can't stress this enough. I can't. If you're looking for a sign to start your income journey, this is it. DIVO is your ETF. And if you got something on this video, of course, subscribe, comment, like. I appreciate you guys helping the channel out, helping the algorithm. And I truly mean it. Thank you all. Thank you for watching. I hope you guys got something out of this. Catch you guys on the next. Stay tuned.